This video is about the company and the share of Tesla, a company that has turned the automotive industry and the energy world upside down. Tesla is more than just a car manufacturer. The company designs, develops, produces, and sells electric vehicles, but also energy storage solutions such as the Powerwall and batteries for electric cars. Additionally, Tesla also produces solar panels and solar roofs. And not to forget the development of advanced driver assistance systems and self-driving technology with the use of AI. The Tesla share has risen significantly recently, partly due to the fantasy that is in the company and partly due to the election victory of Donald Trump, with whom Tesla's CEO Elon Musk is good friends. Note, this video is not intended as financial advice, but is purely informational and educational. If you find this video interesting, don't forget to subscribe to our YouTube channel and like this video. The Tesla share can be found on the Nasdaq, with the ticker Tesla. Tesla's headquarters are located in Austin, Texas, in the United States. Tesla was founded in 2003. The founders of Tesla were not only Elon Musk but also Martin Eberhard, Mark Tarpenning, J.B. Straubel, and Ian Wright. Although there were multiple founders, Elon Musk is now the CEO of the company. Let's zoom in on Elon Musk. Elon Musk was born in 1971 in Pretoria, South Africa. He studied economics and physics at the University of Pennsylvania. Early on, he showed his entrepreneurial drive with companies like Zip2 and PayPal, then known as X.com. He also had an early passion for technology and innovation. His clear vision is to make humanity a multiplanetary species, which is evident in the ambitions of his companies. Musk is a genius with a deep technological insight. From electric cars to rockets and AI, he can see future trends and act on them. He has a constant drive to innovate and push boundaries. He also has exceptional perseverance and the drive to succeed. He is willing to take risks and invest in ambitious projects. Musk is a disruptor in the automotive, aerospace, and energy industries. He is an inspiration for many entrepreneurs and engineers and a driving force for positive change in the world. However, there are also controversies surrounding Musk. He is known for his unorthodox management style and his statements on social media. Despite criticism of Trump, he had a relationship with the former president and was at times an advisor to Trump. There is also criticism of his focus on various companies and his management skills. In short, Elon Musk is a visionary entrepreneur with deep technological insight and a significant influence on the world. His personality has a major impact on Tesla, both positively and negatively. This is an important point to keep in mind if you want to invest in Tesla shares. Let's now take a look at the different activities of Tesla and how they contribute to the company's total revenue. Tesla is more than just a car manufacturer, and the revenue is divided across various sectors. The main activity of Tesla is the sale of electric vehicles, the automotive division. This division includes the design, development, production, and sale of electric cars, such as the Model S, Model 3, Model X, and Model Y. This division accounts for about 80 to 85% of Tesla's total revenue. Car sales are by far the largest source of income for the company. In addition to cars, the energy storage division is also an important activity. Here, Tesla produces and sells battery systems for homes, the Powerwall, businesses, the Powerpack, and power plants, the Megapack. The revenue contribution of the energy storage division is about 5 to 10% of Tesla's total revenue. This is a rapidly growing division of Tesla, due to the increasing demand for energy storage. Thirdly, there is the solar energy division. Here, Tesla produces and sells solar panels and solar roofs for individuals and businesses. The contribution of solar energy to the total revenue is about 2 to 5%. It is still a relatively small part of the revenue, but it is growing. Finally, there is the service division, or software and other services. The revenue here comes from software services, such as full self-driving, FSD, and maintenance of the cars. Also, the income from charging other brands at Tesla superchargers falls under this, as well as other software services. The revenue contribution of the services is about 5 to 10%. It is clear that car sales are by far the largest source of income for Tesla, but there are also other important divisions that contribute to the company's total revenue. The distribution is not static and can change in the future, but this overview gives a good representation of the current situation. Tesla has several strong competitive advantages that give the company a unique position in the market. First, there is vertical integration. Tesla produces a large part of the components itself, such as battery cells, chips, and drivetrains. This gives Tesla more control over production, costs, and quality. It allows Tesla to scale up quickly. Secondly, Tesla has a direct-to-consumer model. Tesla sells the cars directly to consumers, without intermediaries. This creates a direct relationship with customers and allows the company to have more control over the sales experience. The focus is on online sales and orders. Tesla is an innovative company, and this is clearly visible in its software and technology. Tesla can continuously improve the cars with wireless software updates, making the cars better over the years. AI is also important for improving the software and for autonomous driving. Tesla designs and produces its own chips for optimal performance. In the field of battery technology, Tesla is also a leader, focusing on innovation, performance, and cost reduction. Tesla is one of the few manufacturers that produce their own batteries on a large scale. Additionally, Tesla has an extensive and global network of superchargers, making it easy to charge the cars. Access to this network was long exclusive to Tesla owners. Tesla has a strong brand reputation. Tesla is seen as an innovative company with advanced technologies, creating a loyal customer base. Finally, Tesla is also working on self-driving technology, also known as full self-driving. Tesla is one of the companies leading in this technology. The future is autonomous driving, and Tesla plays an important role in this. In short, Tesla distinguishes itself through vertical integration, a direct-to-consumer model, software innovation, battery technology, an exclusive fast-charging network, a strong brand, and autonomous driving. These aspects give Tesla a unique position in the market. It is a company that constantly innovates and pushes the boundaries of technology. Let's now take a look at the possible future of Tesla and the company's vision. The future of Tesla is ambitious and goes beyond just electric cars. It is a future where technology plays a central role in the lives of people around the world. In the future, Tesla will perfect fully autonomous driving. Tesla's robot Axis will be available worldwide, disrupting the transportation sector. Everyone will be able to own a Tesla that drives itself, making travel more efficient, safer, and more enjoyable. Self-driving cars will change how cities are designed and how we move around. Tesla will become a leader in sustainable energy, making solar energy and energy storage accessible to everyone. Tesla's technologies will free homes, businesses, and cities from their dependence on fossil fuels. Tesla's supercharger network will be further expanded with even more fast charging stations. Tesla's AI technology will also be used in various segments, from autonomous driving to improving software and developing new products. The knowledge of AI and robotics will be applied to perform human tasks and develop new products that improve the quality of human life. Through the link with SpaceX, Tesla will also indirectly play a role in space exploration. Tesla's technologies will contribute to space exploration technology and the creation of a multi-planetary species. Tesla will create a fully integrated ecosystem where cars, energy, AI, and software work seamlessly together. The data Tesla collects will be used to continuously improve products and services. All these developments will ensure that Tesla can generate enormous revenue and profit, making the stock price even more valuable. It is a visionary future where technology is the foundation for the company's growth. Tesla's possibilities are far from exhausted, and there is still enormous potential in the company. Let's now take a look at who Tesla's customers are and what contribution these customer groups make to the company's total revenue. Tesla has a wide range of customers, but the largest revenue still comes from car sales. The largest customer group is private buyers. These are individual consumers who buy a Tesla for personal use. They purchase the Model S, Model 3, Model X, or Model Y. These private buyers account for about 70 to 75% of Tesla's total revenue. They are individual buyers worldwide who buy Tesla cars for their own use. In addition to private individuals, there are also businesses that purchase Tesla products. These are companies that lease or buy Tesla's electric vehicles for their fleet. There are also companies that use Tesla's energy solutions, such as the Powerwall, Powerpack, or Megapack. These businesses account for about 15 to 20% of Tesla's total revenue. These are companies that are making their fleet more sustainable or want to integrate Tesla solutions into their operations. Governments are also an important customer group. Governments purchase Tesla's electric cars for their own fleets. Additionally, governments also buy Tesla's batteries and other energy solutions. Governments account for about 5 to 10% of Tesla's total revenue. These are governments that are making their fleet more sustainable or implementing Tesla solutions to improve energy infrastructure. Finally, there are the energy services. This revenue is harder to express in exact percentages, but it partly falls under the sale of hardware. Energy services include consumers and businesses that use Tesla's various energy services, such as the superchargers, Powerwall, and solar panels. In short, Tesla's revenue mainly comes from private individuals who buy the cars. Additionally, there are also businesses and governments that make a significant contribution. Tesla's various energy services are also important for revenue. Tesla thus has a diverse customer base, with a focus on sustainable solutions. Who are Tesla's competitors? First, there are the traditional car manufacturers. The Volkswagen Group is a major competitor, with brands such as Volkswagen, Audi, Porsche, and Skoda. The Volkswagen Group is investing heavily in electric vehicles and has a growing range of EVs. They have a significant market share in the EV market, but still less than Tesla. The Volkswagen Group is especially a strong player in Europe. Toyota is another traditional car manufacturer and one of the largest car manufacturers worldwide. They have a growing focus on hybrid and electric vehicles. Toyota is a dominant player in the general car market but still has a relatively small market share in the fully electric car market. General Motors, GM, is also a major competitor. GM is busy transitioning to electric cars and has several new electric models. GM has a growing market share in the EV market but is still behind Tesla. GM is mainly a competitor in the American market. Finally, Ford is a competitor transitioning to electric cars and developing several electric models. Ford also has a growing market share but is still behind Tesla. Ford is also an important competitor in the American market. In addition to traditional car manufacturers, there are also new EV startups. Rivian is such a company, focusing on electric pickup trucks and SUVs. Rivian still has a relatively small market share and focuses mainly on the higher-end segments of the market. Lucid Motors is another EV startup, focusing on luxury electric sedans. Lucid also has a small market share and targets the premium segment. Finally, there are companies active in battery technology. CATL is one of the largest producers of batteries for electric vehicles. CATL has a large market share in battery production and is a supplier to various car manufacturers. BYD is another battery producer but also active as a producer of electric vehicles. BYD has a large market share in battery production and is both a supplier of batteries and a competitor in the EV market. In short, Tesla operates in a competitive market with large traditional car manufacturers, new EV startups, and companies active in battery technology. Let's now take a look at the trends in Tesla's financial performance, particularly the revenue and operating income from 2019 to the most recent TTM, trailing 12 months. What immediately stands out is the clear upward trend in both indicators. Since 2019, we see that Tesla's revenue has increased significantly year after year. This growth in revenue is due to the increased demand for electric vehicles, as well as the growing activities in the energy storage and solar energy sectors. Tesla's revenue has experienced exponential growth during this period. In addition to the rising revenue, we also see that the operating income has improved significantly. This means that the company is not only selling more but also becoming increasingly efficient in generating profit. Tesla's profitability has increased significantly in recent years. The positive trend in revenue and operating income shows that Tesla has experienced strong growth and that the demand for Tesla's products continues to increase. This positive trend is important to keep in mind when evaluating the stock. It shows that the company's activities and strategy are successful and that the foundation for future growth is present. It is important to continue conducting your own research and keep an eye on the most recent financial reports. The figures show a clear and positive trend, both in revenue and operating income. The trend is clearly upward. The stock price of Tesla has experienced a remarkable journey over the past few years, with significant increases in periods of volatility. The stock price of Tesla has seen substantial growth in recent years. This growth is attributed to strong revenue and profit growth, technological advancements, and the unique market position Tesla has acquired. As a result, the stock has gained immense popularity among investors. The price-to-earnings ratio, also known as the P/E ratio, is relatively high. This indicates that the market has high expectations for the company's future growth and profitability. The P/E ratio of Tesla is a frequently discussed topic in the financial world. This high valuation is driven by several factors. Firstly, there is the belief that Tesla has the potential to become a leader in the automotive industry as well as in the energy sector. Investors have confidence in Tesla's vision and the company's ability to innovate. Additionally, Tesla has built strong brand loyalty among its customers, and there is potential for the company's autonomous technology. Tesla's self-driving technology is seen as a game-changer for the future. The influence of politics on Tesla's stock price is also an important factor to consider. Former President Trump was previously critical of subsidies for the electric vehicle industry but also expressed admiration for Elon Musk's entrepreneurial spirit. A Trump election victory could create uncertainty about future policies for electric vehicles, and consequently, for Tesla's stock price. The relationship between Trump and Musk is certainly something to watch. However, it is important to emphasize that a stock's price depends on various factors, and it is crucial not to focus solely on political influences. The company's performance, innovations, competition, the economy, and market sentiment also play significant roles. In summary, Tesla's stock price has skyrocketed in recent years, leading to a high valuation. This valuation is driven by confidence in the company's future and its focus on technology, but there is always a risk associated with a high valuation. It is essential to conduct your own research and keep an eye on the numbers. Finally, let's look at the key pros and cons of Tesla, so you have a clear picture of the opportunities and risks associated with this stock. On the positive side, Tesla is the market leader in electric vehicles, with a strong brand name and a loyal customer base. Tesla is also a pioneer in battery technology, autonomous driving, and software development. This focus on innovation is a crucial foundation for future growth. Tesla has a lot of control over production through vertical integration, and the company has enormous growth potential in the automotive industry, the energy sector, AI, and autonomous driving. Tesla has also shown strong revenue growth, and we see that profitability has improved in recent years. Finally, direct sales to consumers ensure better customer relationships and better control over the brand. On the other hand, there are also some risks to consider. Tesla's stock is highly valued, which can lead to an increased risk of a price correction. Tesla operates in a competitive market, with large traditional car manufacturers and new startups. The company is heavily dependent on the vision and leadership of Elon Musk, which is both a plus and a minus. Tesla also still faces production challenges and logistical issues that can impact production. Tesla relies on technological developments, and if another technology takes over, it could impact the company. Political developments and trade conflicts can also negatively affect Tesla's results. Finally, the focus on the long term and the high investments in production and development can negatively impact profitability. In short, Tesla is an innovative company with a lot of potential. But there are also risks that investors should consider. The high valuation, competition, dependence on Elon Musk, production challenges, technological risks, political risks, and high investments are all points to take into account. It is important to do your own research to see if Tesla's stock fits your investment strategy.